The top business stories live from the Sky News City studio. Grocery price inflation falls to a two-year low. Bank of Ireland shares rally after yesterday's post-results sell-off. I'll be joined by the Chief Executive. Plus, the latest from the Mobile World Congress in Barcelona, including news of a big AI alliance. Good afternoon, this is Business Live with me, Ian King. Grocery price inflation has fallen to a two-year low, according to research published today. The marketing data and analytics company Kantar says that during the 4 weeks to the 18th of February, grocery price inflation fell to 5.3%. That's down from 6.8% in January and the lowest rate since March 2022. Kantar highlighted the latest shots in the price war, which saw Morrisons launch a price match scheme with Aldi and Lidl, following a similar initiative in January from Asda. It also noted an 18% rise in total alcohol sales during the period, as dry January came to an end, with sales of wine up 28%. Some other business news stories for you now. And the asset manager Aberdeen has suffered a drop in profits after investors continue to withdraw their funds. An adjusted operating profit of £249 million for 2023 was down 5% on 2022, with the company suffering a 35% outflow in net funds during the year. However, operating profits were up at the company's financial advisory business and also at Interactive Investor, the UK's second largest direct-to-consumer investment platform. Shares of Aberdeen, which last month announced plans to cut 500 jobs, are currently off 3.75%. The FTSE 100 medical technology company Smith & Nephew said today it was expecting to enjoy strong sales growth this year due to continued demand for its sports, medicine and ear, nose and throat services. The company, a leading provider of hip and knee implants, was reporting an operating profit of $425 million for 2023. That was down 5.5% on 2022 and largely reflected a rise in costs. But Deepak Nath, the chief executive, said its efforts to improve the business were starting to pay off, with almost half of its 2023 growth coming from products launched in the last 5 years. Shares are off by 1% just now. And the specialty chemicals company Croda said today it was seeing an improvement in demand in its consumer care business, a key supplier to the cosmetics and beauty sector. But the FTSE 100 company warned it was still seeing destocking in demand in its crop protection business, which provides additives aimed at enabling farmers to improve their crop yields. Full-year pre-tax profits for 2023 came in at £309 million. That was down 33% on 2022, which it said reflected a return to more normal trading patterns after 2 record years following the pandemic. The shares are currently off 3.25%. Now, shares of Bank of Ireland have rallied after a sharp sell-off on Monday following a prediction that the net interest margin, that's the spread between what the bank pays depositors and charges borrowers, will fall this year by more than the market expected. It's taken the shine off a rise in full-year pre-tax profits at Ireland's biggest lender from €1 billion in 2022 to €1.94 billion in 2023, and news that it plans to hand out €1.15 billion to shareholders through dividends and share buybacks in coming months. Well, joining now, I'm very pleased to say it's Myles O'Grady. He's Chief Executive of the Bank of Ireland. Myles, welcome to you. Let's start with that net interest margin story first. I mean, you think basically the European Central Bank is going to cut rates more rapidly than financial markets are predicting?
Well, good afternoon, Ian. I mean, more broadly, yes, yesterday, Bank of Ireland, we announced our results for last year. It was a very strong performance. It represents the completion of the first year of our 3-year strategy. That strategy is working out very well. Some of the headlines: we grew our Irish loan book by 23%, customer numbers up by 8%, and of course our wealth assets up by 18%. That's translated into strong profits, as you say, of £1.9 billion, and of course returning £1.15 billion to shareholders, again an important stakeholder. To the point around yesterday and the assumption on rates, I think there's general questions in the marketplace here is that following the steep rise in rates over the last number of years, that as inflation now begins to come down, which of course is a good thing, that rates will also come down as well. That's a sentiment that's in the marketplace. From a Bank of Ireland perspective, we've committed out over the next number of years. I expect our return on equity, for example, in 2025 to be as committed to in the region of 15%. Very strong building blocks to support that.
Yeah, very punchy compared with some of the UK lenders, it must be added as well. There was an impairment charge of €403 million during the period. You're obviously quite cagey about commercial real estate.
Well, we are careful, and our objective, certainly my objective as CEO, is to make sure that we get our arms around the problem, right? And so, and that's reflected in the impairment charge that we took last year. So commercial real estate, it comprises about just under 9% of the Bank of Ireland total book. It's fallen 12% by design, so we've taken off a little bit of a risk appetite for that business, mainly because of some of the concerns we have. The geopolitical backdrop is one factor, new ways of working from a hybrid perspective also, and of course the rate environment is a factor too. So yes, we did increase our impairment charge for commercial real estate, but very much around, as I say, getting our arms around the problem.
It's quite interesting. You mentioned there the size to which the loan book expanded last year. You're still seeing plenty of credit demand. What sort of areas of the economy?
Well, certainly in the Irish economy, there are a number of very strong factors that are supporting the economy itself. And of course, Bank of Ireland plays such an important role in the Irish economy and indeed in the UK. But certainly in Ireland, we've seen in the mortgage business, the supply of new homes is increasing. There's great demand for that. Last year, Ireland produced 34,000 new homes. That's going to grow. There's a demand for, I would say, at least 50,000. That supports a mortgage book growth. So our mortgage book grew 8% last year, and I expect that to grow further into the future. Also, business and corporate lending, also an area of growth as we support the Irish economy. They're areas of balance sheet growth. And of course, you may know a number of years ago we acquired Davy Stockbrokers, Ireland's leading wealth business. So we expect, combined with our new Ireland insurance business, our wealth business to also grow over the next number of years. Yes,
this was the full first full year contribution from Davies. You're obviously quite happy with that business.
Yes, we are, and we've seen an increase of, in reach of 18% increase in assets under management. That's a very strong performance, both from Davy but also from our existing New Ireland business. And indeed in Davy, both our wealth and capital markets business income was up year on year.
You mentioned that you grew the mortgage book in Ireland by 8% last year. Where do you see house prices going in 2024?
Well, so, I mean, given the outlook, the biggest factor that I feel is going to influence house prices is the demand for homes, and that the supply is less today than demand. I mentioned 34,000 units and a demand for more. So I think we can think about certainly a stable to a modest growth in house prices for Ireland next year, but this year rather.
It's very interesting you mentioned the number of houses built there, 34,000. I mean, that's a proportion of the population. That's significantly ahead of where we are in the UK. What's Ireland getting right on house building that perhaps the UK could learn from?
Well, I mean, certainly in Ireland, as in other countries, there has been an undersupply of homes. That's been a factor in many jurisdictions. And last year, Ireland's 34,000 output is a 15-year high. But I'd say it's coming from a low base. The last financial crisis slowed down the rate of development. So it's an area, I think, for all countries to think about. And so we're certainly pleased that those numbers are increasing. It's important.
Now, you have a full-service bank in the UK as well. What are you seeing on this side of the Irish Sea?
Well, a very strong performance. And I should say we've been, our first branch in London was opened in 1971 in Shepherd's Bush. So we're here for more than 50 years. We offer mortgages, savings, foreign exchange, car finance as well, and that business has been very strong. So over the last number of years, we have gone after a UK strategy, which is really around, really off a smaller balance sheet, but a higher return, a more efficient funding model, and a more efficient operating cost base. So we're very supportive of that business. It represents about 20% of our total profits. It's important to us.
How worried are you about this Financial Conduct Authority into the car finance market?
Yeah, for sure. I mean, our car finance book in the UK is about 2.6 billion. So it's a relatively small part of our overall balance sheet, but it's an important part of our UK business as well. Our market share is about 2.6%. So we're a small player generally in the marketplace. Now, the work that we've done over the last 12 months is to make sure that we feel we've treated our customers appropriately and fairly, and we certainly look forward to working with the FCA in relation to that as well.
OK, Myles, we have to leave it there. Busy time for your post-results roadshows. Do appreciate you spending the time to chat.
Thank you very much indeed.
Thank you.
Thank you.
Now, among the main announcements so far at Mobile World Congress, the annual gathering of the world's tech and telecoms companies, has been the formation of an alliance aimed at effectively using mobile base stations with the help of artificial intelligence. Well, among those in the alliance are Microsoft, Samsung, the chip maker Nvidia, and the Japanese investor SoftBank, the majority shareholder, of course, in the UK chip designer Arm Holdings. Well, joining me now from Barcelona is Ruichi Wakikawa, Vice President of the Research Institute of Advanced Technology at SoftBank. Ruichi, welcome to you. Tell me about this alliance. What do you hope to achieve with it?
Yes, as you know, last 12 months, all the tech giants spend enormous investment into AI. And as a telecom industry, we telecom industry has to really capture this AI boom. And we really need to really use AI and improve the AI, improve using the AI to improve our network, and also serve the AI for the new services, and also leverage AI for the better operation. So we really need to understand how AI helped our telecom industry in the future.
I understand a lot of this is about enabling functions that might normally be carried out at the cloud in mobile base stations. Is that correct?
Yes. So once a base station becomes a software base, we can apply a lot on the AI to improve the network performance. So that's what we want to advance the network using the AI and unlock the full potential of the radio. That gives a customer have a better network quality and coverage and capacity.
Obviously, this is going to harness not only 5G technology, but 6G technology too. What are the main differences that people need to understand between 5G and 6G?
Oh, that's a very good question. So I think people are enjoying the 5G today, and in the 6G, network comes everywhere. AI needs a network, high performance network, which is a low latency, high bandwidth, and real time. So I think that in the 6G, you will get the more high speed, and not only the smartphone, any devices will get all the high speed network. So I think currently a 5G is customer use a phone and play with a smartphone. But all the devices, automotive, like robots, and some of the appliances in your house is all connected by super fast network in the 6G.
Obviously, Japan was pretty ahead of a lot of advanced economies in terms of 5G rollout. Do you anticipate that being the same for 6G?
Yes. So we are very keen to invest to the infrastructure, because network is going to be based for any enterprise services, commercial services. So we need a better network for every services available in the market. So we are happy to continue investing to the infrastructure.
What could other countries learn from the Japanese approach? I mean, I remember writing many years ago about 3G rollout and how Japan stole a march on everyone then.
Yeah, I mean, in Japan, for example, we have a lot of fiber, for example, in nationwide, and we have a very dense network. So, for example, in SoftBank, we have more than 200,000 base stations in such small country. So we have a better connectivity and better coverage, and that gives a better user experience to the customer and a better commercial services from the enterprise to the customer. So it's we are opening the whole opportunity for the enterprise company as well as consumer services.
And looking at the telecom sector more broadly, how do you assess its progress to date in incorporating AI into what it does?
So unfortunately, telecom industry, especially operator, is said to be very slow to adapt the new technology. I admit it. So I think that's one of the reasons we formed this AI Alliance. So we formed an ecosystem to really adapt AI as soon as possible, and follow also technology advancement in the AI side and bring it that new technology into the telecom. That's what we are, it's very inevitable, for the operator, really use AI for the future growth.
OK, Ruichi, we have to leave it there, I'm afraid. Really appreciate you joining me today. Thank you.
Thank you so much.
Still to come here on Business Live, we'll have a look at how the markets have finished up this Tuesday afternoon. Stay with us.
think there's three things that we need to be thinking about. Why is it that increasing numbers of children are suffering with their mental health? And I think there's multiple factors behind that. Secondly, are these children and young people getting the support that they need from the health system, from the educational system? And I guess from my experience working as a GP in London, I think, often they're not. And thirdly, we have to be thinking about, for these children that are struggling with their mental health and struggling to engage in school, who are missing days in school, struggling to do their exams, are we giving them other opportunities to get the skills that they need in life to get dignified jobs in the future? I think you get into a vicious cycle. So if you don't have the qualifications and you don't have the skills to get good, decent, dignified work, then that can make your mental health get worse because you feel hopeless about your future. But then, of course, not being in work can also contribute to poor physical and mental health. What really worries me is that we're failing a generation. So now, in my clinic, I think probably on a daily basis, I'm seeing kids who are coming in who are telling me that they're really struggling with their mental health. And I find it quite personally heartbreaking as a GP that I know if I'm going to refer them to get to the mental health service to get support, they can be waiting months, sometimes 6 months, sometimes longer than that, to get the support that they need. And often I see in that timescale their mental health deteriorate. And I also think we need to be looking at our education system. I had a case recently of a young boy really struggling with his mental health, panic attacks, anxiety. Actually, a large part of that was due to the fact that his living conditions were really, really poor. And then he just wasn't getting the support from school. To be honest, the school actually then went and suspended him for poor behaviour. So we need to make sure that schools as well are equipped to support these kids that are struggling with their mental health, so that they don't get into the spiral of not being able to engage in school, not getting in qualifications, and then having poor job prospects and lack of opportunities later on in life.
Slide Emirates. Slide better. Fly Emirates. Fly better. Thank you.
Welcome back. Time for a look now at the markets. And stocks in Europe have had a largely positive session today, following some decent corporate earnings updates. You can see only the IBEX in Madrid finishing in negative territory among the major indices. Talking points today include Bouygues. The French conglomerate is up 7% after its results came in ahead of expectations. Here in London, though, not such a pretty picture for the FTSE. Finished more or less unchanged. Gains for mining stocks and banks balancing out losses elsewhere. Leading blue chip gainer in percentage terms, rare day in the sunshine, is Vodafone, up 3.5% on reports its Italian arm may combine with the Italian business of Swisscom. Elsewhere, Flutter Entertainment is up 2%, benefiting from a bit of supportive broker comment. To the downside, I mentioned Croda earlier in the programme. That's finished off just over 3%. Meanwhile, Imperial Brands is off nearly 5%. That is on reports of a possible tax on vaping products next week. Outside the FTSE 100, Close Brothers, which last week hit a 29-year low. That's attracted some speculative buying and has finished up just over 3.25% higher. While On the Beach is up 14% after signing a long-term distribution agreement with Ryanair. But Aberdeen off 3.5% on its results. Over on Wall Street, it's been a fairly lacklustre afternoon thus far. Nasdaq moderately ahead there. One interesting point to mention, Viking Therapeutics up some 84%. That's after an anti-obesity product on which it is working showed hopeful results in a study. Crypto-linked stocks, including Coinbase, which is up 2.25% at the moment, are also trading to the upside. That's after the price of Bitcoin hit a 2-year high. Over on the foreign exchange markets, pretty quiet to be all honest ahead of the US inflation data later this week. Meanwhile, the oil price has perked up on expectations that the OPEC Plus cartel will extend its supply cuts next month. Barrel of Brent crude currently changing hands at $83.26 a barrel. That's up 0.9%. What joining me this afternoon is Michael Browne, Chief Investment Officer at Martin Currie. Michael, good to see you this afternoon. Obviously, the house builders attracted a lot of attention yesterday. What were your main takeaways?
Well, actually, there was a lot of headlines, but when you dig into the actual announcement, there wasn't much in there, except, you know, yes, there's going to be a little look at sort of, are they been colluding over some pricing or some land buying? I'm not sure there's a huge amount in it, but the exciting bit is, can you loosen up our extraordinarily arcane and difficult planning laws? Because if you can do that, and if we could go back to setting targets for local authorities, we could change that process, that would be really good news for them. Because whichever way you like it, they did 2/5 of all house building last year, and if you want big projects done, they're the people to do it.
Absolutely. Obviously, we've had this big merger between Barratt and Redrow, where it's more takeover than a merger.
Yes.
Would you expect to see more consolidation in the sector?
Hard to say, and I wonder if the CMA might come back and say a little bit about that as well. I think you've got to split the sector into two pieces. You've got to split where you've got land of 150 building plots or more, and the land sort of under that, probably under the 50 building plots or less. The 50 building plot, that's your private builder sitting in a town. He knows his town inside out. He'll do that. Above that, and the big players really dominate that. And that's where I would look and say how much and what percentage do they own of that particular market. But if you don't differentiate, you won't get the right answer.
Yeah. Now, I mentioned in the report there, On the Beach, big relief rally. You could call it, wasn't so long ago, Ryanair were calling them a bunch of pirates.
Exactly, and they were in litigation and have been since 2010. Look, when 40% of the flights are bought by your customers are coming from one person, it's a good idea to settle, right? It's a good idea to bank it, right? And that's what they've done at last. That gives them security of supply. That gives you or me the ability to go on there, right, I'll buy the holiday, not quite yet. I'll buy them a flight, all done, wrapped up, thank you very much, I'm off. The question I have is, what is Ryanair doing in this tourist market? And is this another leg that it's beginning to use to dominate certain routes? And if I know them, that's what they'll be doing, because they're experts at the business of flying people elsewhere. On the Beach, suddenly don't have the negative comparison with, say, JetBlue, who, of course, own their own airlines.
Yeah, absolutely. Worth pointing out, I mean, you mentioned holidays. I mean, it's been a growing area for EasyJet of late. I mean, it's one of the sort of shining points in their recent output.
Yeah, and 25% of On the Beach is probably EasyJet as well. So, you know, are we going to see agreement there, or does this squeeze them out? And that's exactly my point.
Yeah, exactly. Well, a week tomorrow we'll be sitting down for Budget Day. What are your expectations?
Well, I would expect... so, Jeremy Hunt's got a big problem. Do I cut taxes and risk interest rate cuts, or do I leave it as it is at this particular point in time and say, actually, the interest rate cut is my big thing for the consumer? I'm not sure which way round he'll play it. He won't have much room for manoeuvre. We know that. So the key, I think, if you're taking a political stance, is probably, can I get the maximum number of interest rate cuts through before whenever the election comes?
Yeah.
And that's the critical piece. Bits and pieces, yeah, vaping taxes, but... the thing I'm excited about will be the British ESA. I think an extra 10 grand's coming on for your ESA, and if that comes through for April the 5th, that'll be great news for UK stocks and bonds.
Fantastic news for wealth managers as well, no doubt, Michael.
Well, yeah, and maybe that's some of the interest in Close Brothers today.
All All right. Got to leave it. Oh, Michael, sorry, I thought we were out of time. We got just one more. Go on.
I just was going to say, in terms of looking at where we are in markets at the moment, obviously we're going to start that Bank of England rate cut, and that will go on for 6 to 12 months, and then we're going to go for a period of growth. Interestingly enough, I went back, because people in my office have never seen an interest rate cut, and said, what happens? The 250 is outperformed 5 out of 6 times.
Amazing. Got to leave it there, Michael. Thanks for joining me. We're cutting you off because in the last few minutes, Alan Bates, the Post Office campaigner, has been speaking to reporters after facing questions from MPs earlier today. Here's what he said.
I mean, as you say, compensation. I keep calling it financial redress, which it is. But I think there are a lot of other strands that come out of this story. But the key thing, and the one that everyone's got to remember, is we've got to get money out to the victims and got to get it out now.
Where do you think the focus of this story should be? Obviously, there's a lot of questions about Staunton and Kelly phasing off.
No. I mean, there is only one priority in all of this, and that's, as I say, get the money out to victims now. Full stop. Everything else will follow from there. Depends where it's got.
What will get this process moving quicker? Removing the post office entirely? What's going to get this moving?
I don't know. There's a lot of people looking at that at the moment. Hopefully, some of them are really getting their act together now, trying to push it forward. I mean, it's got to be speeded up. It really does have to be speeded.
There you go, that's Alan Bates. We'll no doubt have more on that throughout the evening here on Sky News. Up next after this short break, it's Mark Austin with the News Hour. I'm back at 11:30 tomorrow. Hope to see you then. Thanks for joining me today. Cheerio.